Operating ratio is nothing but operating cost ratio. Net sales is total sales minus sales return. Capital employed is equals to debt plus equity. Gross profit ratio is equals to gross profit divided by net sales into 100. Other ratios are expressed in percentage. Stock turnover ratio is expressed in number of times. Hello everyone, I am Meghana from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 4 of Unit 2, Subject Accounting. In the last session, we have discussed about ratio analysis. In our previous session, we solved 2 problems on ratio analysis. Let us continue with some more problems on ratio analysis. Third problem on ratio analysis. Just look at the problem. To opening stock 76,250, purchases 3,15,250, to carriage 2,000, wages 5,000, gross profit 2 lakh. Yeah. By sales 5 lakh, closing stock 98,500. This is information about trading account. Then profit and loss account. To administrative expenses 1 lakh, to selling and distribution expense 13,000, to finance expense 7,000, to other non-operating expenses 2,000. Next, credit side, by gross profit. By gross profit carried down should be brought down for the profit and loss account. By gross profit 2 lakh, by non-operating income 10,000. Net profit 88,000. So trading and profit and loss account we have. From this information, we need to calculate gross profit ratio, operating ratio. Operating ratio is nothing but operating cost ratio, stock turnover ratio, net profit ratio and operating profit ratio. So we have all the information to calculate this ratio. So let us begin with gross profit ratio. First, gross profit ratio formula. Gross profit ratio is equals to gross profit divided by net sales into 100. First, write the formula. First, gross profit ratio is equals to gross profit divided by net sales into 100. In this problem, we have gross profit of rupees 2 lakh and net sales. Net sales is total sales minus sales return. So we have only sales. We don't have sales return in this problem. So 5 lakh is considered as net sales. 2 lakh is gross profit. 5 lakh is net sales. Gross profit is equals to 2 lakh. Net sales 5 lakh into 100. %. 40% is gross profit ratio. Gross profit ratio is equals to 40%. So gross profit ratio we calculate. Next, operating ratio. First, write down the formula for operating ratio. Operating ratio is nothing but operating cost ratio. Operating ratio is equals to operating cost divided by net sales into 100. Here in this problem, operating cost, administration expenses, selling and distribution expenses, finance expenses. All this together 1 lakh plus 13,000 plus 7,000. Total of all these three is operating cost. So first write down operating cost. operating cost is equals to administration expenses, selling and distribution expenses plus finance expenses. Operating cost is equals to administration expense plus finance expense plus selling and distribution expense. In this problem, administration expense is 1 lakh. Then finance expense 7,000. Selling and distribution expense 13,000. So 1 lakh plus finance expense 7,000 plus selling and distribution expense 13,000. Total 1,20,000. So now we got operating cost. So 1,20,000 is operating cost divided by net sales. Net sales is 5 lakh into 100. Just write down operating ratio is equals to operating cost 1,20,000. 1,20,000 divided by net sales rupees 5 lakh. Here net sales is 5 lakh. 5 lakh into 100. 1,20,000 divided by 5 lakh into 100. 5 lakh into 100 is equals to 24%. 24% is operating ratio. Operating ratio is equals to 24%. Next, stock turnover ratio. Write down formula for stock turnover ratio. Stock turnover ratio is equals to cost of goods sold divided by average stock. Cost of goods sold. So cost of goods sold is equals to sales minus gross profit. So here sales is 5 lakh, gross profit 2 lakh. So write 5 lakh minus 2 lakh. 3 lakh is cost of goods sold. Next, average stock. We need to calculate average stock. Average stock is equals to opening stock plus closing stock divided by 2. So in this problem, opening stock is 76,250, closing stock 98,500. Right, 76,000. Right, 76,250 plus 98,500 divided by 2. 76,250 plus 98,500 divided by 2 is equals to 87,375. Right, 87,375. 375. 87,375 is average stock. Now we got cost of goods sold 3 lakh and average stock 87,375. Just find out the stock turnover ratio. Stock turnover ratio is equals to cost of goods sold. Cost of goods sold is 3 lakh, right? 3 lakh divided by average stock. Average stock is 87,375, right? 87,375. Result is stock turnover ratio. Stock turnover ratio is equals to 3 lakh divided by 87,375. Answer 3.45 times. Stock turnover ratio is expressed in number of times. All the other ratios are expressed in percentage. Stock turnover ratio is expressed in number of times. So, stock turnover ratio is over. Next, net profit ratio. Write down formula. Net profit ratio is equals to net profit divided by net sales into 100. Net profit is 88,000. Net sales 5 lakh, right? 88,000 divided by 5 lakh into 100. Result is net profit ratio is equals to 88,000 divided by 5 lakh into 100. 88,000 divided by 5 lakh into 100 is equals to 17.6%. 17.6%. (17.6% is net profit ratio. Next, operating profit ratio. Write down the formula for operating profit ratio. Operating profit ratio is equals to operating profit divided by net sales into 100. Operating profit ratio is equals to operating profit divided by net sales into 100. Now we want operating profit. To calculate operating profit, operating profit is equals to net profit plus non-operating expenses minus non-operating income. Calculate operating profit. Formula is net profit plus non-operating expenses minus non-operating income. In this problem, net profit is equals to 88,000. Right? 88,000 for net profit. plus non-operating expenses. Here we have other non-operating expenses rupees 2000, right? 2000 for non-operating expenses minus non-operating income. Non-operating income is 10,000, right? 10,000. 88,000 plus 2,000, 90,000. 90,000 minus 10,000 is equals to 80,000. 80,000 is operating profit. 80,000 is operating profit. We know net sales. Net sales is 5 lakh into 100. So calculate operating profit ratio is equals to operating profit. That is, operating profit is 80,000. 80,000 divided by net sales. Net sales is 5 lakh into 100. Result is operating profit ratio. 80,000 divided by 5 lakh into 100 is equals to 16%. It is expressed in percentage. 16% is operating profit ratio. So now we calculate all gross profit, operating ratio, stock turnover ratio, net profit and operating profit ratio. Gross profit ratio is 40%. Next, operating ratio or operating cost ratio, that is 24%. Operating cost or operating ratio is 24%. Then stock turnover ratio is 3.45 times. 3.45 times. Next, net profit ratio. Net profit ratio is 17.6%. 17.6%. Then operating profit ratio. Operating profit ratio is 16%. Operating profit ratio is 16%. So we finished third problem on ratio analysis. This is the solution. Let's continue with the next problem. Problem number 4. The following figures related to trading activities of Sri Channakeshava Limited for the year ended 31st-3/2018. Particulars amount. Sales 5,24,000. Sales return 16,000. Purchase 3,28,500. Purchase return 2,250. Stock on 1/4/2018, that is opening stock. 1/4/2018 is opening stock. Stock on 31st-3/2019 is 98,500. Administrative expenses. Under administrative expenses, salary 25,300, rent 2,700, stationery 2,500, depreciation 9,300, other charges 16,500, provision for taxation 40,000. Next, under financial expenses, interest on loan 5,000. Under selling and distribution expenses, salary 7,500, advertising 6,000, travelling expenses 4,000. Under non-operating income, dividend received on share 8,000, profit on sale of shares 7,000. Under non-operating expenses, loss of sale of assets 2,500, provision of legal suit 1,500, debt 14 lakh, equity 8 lakh. You are required to calculate gross profit ratio and net profit ratio, operating ratio and operating profit ratio, return on capital employed ratio and stock turnover ratio. Total you need to calculate 6 ratios. Here, this is trial balance. In this problem, they have given trial balance. But in the previous question, directly they have given trading and profit and loss account. So, it is easy to calculate the ratios. So, now we need to prepare the trading and profit and loss account so that we can easily prepare this gross profit and net profit, then operating ratio, all this. To calculate this ratio, trading and profit and loss account is necessary. So, just prepare trading and profit and loss account for this problem. Using this information, first you need to prepare trading and profit and loss account. Trading and profit and loss account. We know to prepare trading and profit and loss account. In final accounts, we prepare trading and profit and loss account. In the same way, just prepare trading and profit and loss account. First, opening balance or opening stock 76,250. 2. Opening stock 76,250. Next, to purchase 3,28,500. 3,28,500. We have purchase return. Purchase return 2,250 less purchase return 2,250. Outer column 3,26,250. Any other direct expenses? No. So, debit side of the trading account is over. Next, sales. In the trading account credit side, first you need to write sales. Sales 5,24,000. Sales return 16,000. By sales 5,24,000 less sales return 16,000. Outer column 5,08,000. Next, by closing stock. We have closing stock. Closing stock is rupees 98,500. 98,500. Just make a total, write whichever is higher. Total of credit is 6,06,500. Write both side. 6,06,500. Find the difference. Gross profit. Gross profit is 2,04,000. Gross profit is 2,04,000. So, gross profit carried down should be brought down for the profit and loss account. by gross profit is equals to, gross profit is 2,04,000. Now write all the administration expenses, that is indirect expenses. Administrative expenses, salary 25,300, rent 2,700. To salary 25,300, to rent 2,700, to stationery 2,500, depreciation 9,300. To stationery 2,500, to depreciation 9,300. Next, other charges. Other charges 16,500. Provision for taxation 40,000. Other charges 16,500. To provision for tax 40,000. Next, financial expenses. Under financial expenses, interest on loan. Interest on loan 5,000. To interest on loan 5,000. Again, under selling and distribution, we have salary 7,500, advertising 6,000, traveling expenses 4,000. Again, salary 7,500, to advertising 6,000, to traveling expense 4,000. Next, non-operating income. Non-operating income comes under credit side. So, credit side, non-operating income, dividend received on shares 8,000, profit on sale of share 7,000. By non-operating income, under that first, dividend on dividend received on share 8,000. 8,000. Next, profit on sale of share 7,000. Profit on sale of shares 7,000. Next, non-operating expenses. Non-operating expenses. All this is operating expenses. The total of all this operating expenses. Now, non-operating expenses. Under non-operating expenses, loss of sale of asset 2,500, Then provision of legal suit 1500 you are going to consider in profit and loss account. You are not going to consider debt and equity in the profit and loss account. So loss on sale of assets 2500 and provision for legal suit 1500. Loss on sale of asset 2500. Then provision for legal suit 1500. Total non-operating expense is 4000. Now we finished all the entries. Now make a total of both the debit and credit. Total of non-operating income is 15,000. Total of non-operating income is 15,000. Now make a total debit and credit side. Credit side more. So we have 2,19,000 in credit side. So write 2,19,000 both the side. 2,19,000 and find net profit. $2,19,000 minus all the profit and loss account debit side. Net profit is 96,200. Now we have the trading and profit and loss account. In that, gross profit, net profit, operating expenses, non-operating expenses and non-operating income. So we have all the required information. Again here we have net sales. Net sales is equals to sales minus sales return. So we have net sales rupees 5,08,000. So now calculate. Now we can calculate gross profit ratio and net profit ratio. First calculate gross profit ratio. First one. Gross profit ratio is equals to gross profit divided by net sales into 100. Gross profit 2,04,000, net sales 5,08,000, right? 2,04,000 divided by 5,08,000 into 100. Gross profit ratio is equals to 40.16%. Next, we require to calculate net profit ratio, right? Net profit ratio is equals to net profit divided by net sales into 100. Net profit is, here we have net profit 96,200. 96,200 divided by net sales. Net sales is 5,08,000 into 100. So 96,200 divided by 5,08,000. 5,08,000 into 100. Net profit is equals to that is 18.94%. Next, operating ratio. Operating ratio is equals to operating cost divided by net sales into 100. So operating cost is equals to all the salary, rent, stationery, depreciation, other charges, provision for tax, interest on loan, salary, advertising, traveling expenses. All the total of this profit and loss account is considered as operating cost. Write down here operating cost. Operating cost is equals to, right, 25,300, 2,700, 25,300, 2,700, 2,500, next 9,300, 16,500, 9,300, 16,500, next 40,000, 5,000, 7,500, 40,000, 5,000, 7,500, next 6,000 plus 4,000, 6,000 plus 4,000. The total is operating profit. Just make a total. The total of all this is 1,18,800. So operating cost is 1,18,800 divided by net sales. Net sales 5,08,000. 5,08,000 into 100. So operating ratio is equals to 1,18,800 divided by 5,08,000 into 100. Answer 23.39%. Next, operating profit ratio. Operating profit ratio. Operating profit ratio is equals to operating profit divided by net sales into 100. To calculate operating profit, is equals to, operating profit is equals to net profit plus non-operating expenses minus non-operating income. For this, net profit is 96,200. 96,200 plus non-operating expense. Total of non-operating expense 4,000. 4,000 minus non-operating income. Total non-operating income is 15,000. 96,200 plus 4,000 minus 15,000 is equals to 85,200. 85,200. Now we have operating profit. Operating profit ratio is equals to operating profit divided by net sales into 100. $85,200 divided by net sales 5,08,000 into 100. $85,200 divided by 5,08,000 into 100. 16.77%. Operating profit ratio is 16.77%. Operating profit ratio. Next, return on capital employed ratio. Return on capital employed ratio is equals to return on capital employed divided by capital employed. So return on capital employed is equals to EBIT, earning before interest and tax, or operating profit. So now we have operating profit. Operating profit is 85,200. So return on capital employed is 85,200. Next, capital employed. Capital employed is equals to, in this problem, we have debt plus equity. Equity plus long-term loan. Here, debt plus equity. Capital employed is equals to debt plus equity. Debt is equals to 14 lakh plus capital 8 lakh. Total 22 lakh. 22 lakh is capital employed. Return on capital employed is 85,200. So calculate return on capital employed is equals to 85,200. 85,200 divided by capital employed 22 lakh. 22 lakh into 100. Return on capital employed ratio is equals to return on capital employed divided by capital employed into 100. Return on capital employed is equals to EBIT or operating profit. Operating profit is 85,200. In the last calculation, we find operating profit is 85,200. Operating profit is 85,200. Next, capital employed. Capital employed is equals to debt plus equity. 14 lakh plus 8 lakh, total 22 lakh. So 85,200 divided by 22 lakh into 100 is equals to 3.87%. So return on capital employed is 3.87%. Next, last one, stock turnover ratio. Last one, stock turnover ratio. Stock turnover ratio is equals to cost of goods sold divided by average stock. Cost of goods sold is equals to sales minus gross profit. Sales means net sales. Net sales is 5,08,000. Gross profit 2,04,000. Sales 5,08,000 minus gross profit 2,04,000. Cost of goods sold is 3,04,000. Next, average stock. Average stock is equals to opening plus closing stock by 2. Opening stock 76,250, closing stock 98,500. Opening stock 76,250 plus closing stock 98,500 divided by 2. Average stock is 87,375. Now we have cost of goods sold plus average stock. Just calculate stock turnover ratio. Stock turnover ratio is cost of goods sold. Cost of goods sold 3,04,000 divided by average stock. Average stock 87,375. 3,04,000 divided by 87,375. Answer 3.48 times. 3.48 times. 3.48 times is stock turnover ratio. Stock turnover ratio is 3.48 times. Solution for the fourth problem. Here, trading and profit and loss account, gross profit ratio, net profit ratio, then operating cost ratio or operating ratio, next operating profit ratio, next return on capital employed ratio, last stock turnover ratio. This is all about today's session. Let us meet in the next session with one more concept. Until then, keep watching. Thank you.